Thank you so much, Kathy, for coming.
My pleasure.
It's a pleasure. It's been a while. I don't remember the last job report that we were discussing, but this is totally different than what we were discussing.
That's right. That's right.
Is this positive? Because we are seeing U.S. gains 203,000 jobs in November, plus the unemployment rate drops to 7% from 7.3 on return on government workers. I just want to remind our audience, the federal government was shut down.
That's true.
They came back, and this reflects that. Am I right?
I think that is right in part. I also think that when you look at the data overall, this is a good report. It's good enough, but not too strong. So if it was very strong, financial markets wouldn't be too happy, because then it would signal perhaps that the Fed would start to taper sooner and maybe even more aggressively. So this is good enough, but not so good. That's a way to look at the data.
Is that why we're seeing all these indexes in green right now, all the markets, equity markets in green?
That's right. So what I was watching...
They're happy with
this. So what was interesting is initially the 10-year U.S. Treasury bond sold off quite strongly, and we saw yields. I saw yields back up to about 2.9%, but now they've come back down a little bit because they're digesting the data, saying, well, the Fed may start to taper back in December, but they may also just wait until early next year. This data is pretty much in line with a trend increase in payrolls. The unemployment rate dropping to 7% is good news, but when you look at the labor force participation rate, while it bounced back, it's still very low. Employment to population metric, which is another sort of measure of participation. Again, it rebounded on the month, but it's still quite low. So it's not anything that would suggest that the Fed is in any hurry to really pull back aggressively, or even the tightening, I don't think, should be pulled forward. So most people, I think the consensus is, well, it's at least in 2015, maybe even later, before they start to raise short-term rates. I don't think today's report should alter that.
So out of curiosity, I want to ask you, what would not be low enough, or what would be a satisfactory number for the markets to have the opposite direction? Because you're like, this is not satisfactory.
Right.
I see that. I mean, even in your report, you said, okay, it's quantitative easing, the tapering of it might happen in December.
Right.
But as you said, in Wall Street Journal, it says, well, the tapering before the end of the year is far from certain.
That's right.
So I agree with you on that. But what would trigger the markets? What level would be satisfactory to you?
So no, I think this is a good satisfactory report. So what it shows is that the economy is gradually getting better. It doesn't suggest that we're going to have growth of 3%. I guess on one hand, that would be great news. On the other hand, if you did get a report like that, say payrolls were up 300,000, right? That would be a very strong report. Then the markets would be worried that the Fed is going to have to start to taper sooner. So it's sort of this weird situation where we want the numbers to be good, but not too good. That's really where the market mentality is right now. And it makes sense given the Fed's operating principle right now. The question is, they'll continue to do quantitative easing and do it at a healthy pace as long as they think that the economy needs it. And if the data started to print very strong, then you'd have members of the FOMC, the Federal Open Market Committee, saying we need to start to slow down the bond purchases and taper even more quickly. So this is sort of a Goldilocks number. It's good, but not too good.
How about the unemployment rate? Now it's 7%. Do you think we're going to reach the numeric target that Fed put down as 6.5%? Am I right?
Yes.
Are we going to be able to see it soon enough now? Because this is a nice momentum, right, that they gained.
Yes.
I mean, 7.3, now 7.
That's right. It's the unemployment rate is coming down much more rapidly than anyone thought and predicted, frankly, and much more than the Federal Reserve did. So what they've done over the last half a year, maybe even more, is try to back away from that 6.5% target. I think, frankly, they probably, some of them want to lower it, right? There was a discussion lowering the threshold. But if you do that, then no one believes your threshold, because it's a moving target then. It was 6.5. Now you say 5.5. Why should we believe you? So the fact is they're probably not going to change that threshold, but what they're going to try to do is say, well, there's broader labor market condition indicators that we need to look at. It's not really just about the unemployment rate. Yes, they put the target out there. I think they personally probably regret that now, but I don't know that anyone thought the participation rate would come down as much as it did.
And I remember Janet Yellen also adding the GDP number into the picture. She wants to see a stronger growth.
That's right.
What is your estimate for the fourth quarter?
Well, that's a great point. So right now, fourth quarter GDP, especially after the vision that we got for third quarter GDP yesterday, looks even weaker. So we were forecasting about 1.2 percentage point increase. That's very weak. We've now probably going to take that down a little bit. It'd be 1%. So the economy is going to struggle to get to 1% in the fourth quarter. On the other hand, we probably need to average the 2 quarters together. You had 3.6% in the third quarter. Let's say we're right and we get 1%. If you average those together, you're averaging about 2.3% growth. Not overly strong, but a little bit better than maybe the trend growth of what we saw, 2%. So the good news is things are getting a little better, but not too fast and not too strong. So it allows the Fed very gradually, I think, to taper back, and they could wait until Janet Yellen is actually at the helm of the Federal Open Market Committee before they start to do that.
I'm glad you gave us your outlook about the GDP, because everyone was talking about it yesterday that they're going to shave off their fourth quarter growth. Kathy, can we look at the breakdown of this edition of 203,000? Where do we see the growth? Manufacturing, health, education, technology? Where is this coming from?
Well, this was across the board. So again, it's a nice number in terms of the breadth. We saw manufacturing up was 27,000. We saw goods producing jobs were up 44,000. And private was the remainder, was a little bit over 150,000. And within private sector, to me, when I looked at the numbers, it looked pretty nicely dispersed again. Retail was hiring, health and education, which seems to be a staple, right? They're up every month. I think we were up 40,000 this month. So it was a widespread number. It was good. The work week picked up a tenth. I think we're back to 35.4 on the work week. Now, earnings continued to lag a bit. They were up 0.2 on the month, and I believe year on year we're just 2%. But it's better, I guess, than when we were at the absolute low, but that's still not very strong. And then if we take that into the other data that was released this morning, personal income, right, for the month of October was down a tenth. So these data, with average hourly earnings still quite weak, you're going to get a positive income increase, I would expect, with the number of jobs created and the work week. But again, not that strong. And when I looked at the numbers this morning, October disposable income, so after taxes, was down 0.2%. It's very hard to maintain very strong consumer spending when you have such a weak income stream. So that's sort of the thing that the consumer's looking at right now. And they need to be convinced, I think, to really step up their purchases that my income is going to increase. Now, we produced the Consumer Confidence Index, right, the report. Last week, what I looked is, again, those who think income's going to decrease outpace the number of people think it's going to be increasing. That we never had that situation until the last Great Recession. Previously, if you looked at our data, people always thought their income was going to go up more than the people who thought it would go down. It's a very un-American sentiment to worry that you're not going to have future income gains. But of course, that's what we have, and it's rational.
This is a big problem. Even Obama mentioned the other day, inequality in jobs and the income, right?
That's right.
And that's a big concern that we witnessed during Black Friday as well. More people went,
yes,
but less they spent. They spent much less than the year before, even though Cyber Monday kind of compensated. Including me, I did that. But the income growth is extremely concerning.
That's right.
Is it concerning to you too? Because people are not buying, they're looking at the value, the consumption, which is 70% of the economy, is not where we want it to be. So are you concerned about that?
Absolutely, absolutely. We see this in our consumer confidence survey. We see this in the spending numbers. Even the savings rate, now it came down a little bit on the month, but we're still, about 4.8%, I believe, on the month. So it's still a high number. Now, I'm not saying that's not a rational thing for individual households to do, but when we're doing it collectively, we still have this caution That's the problem. And we see it in the consumer and we see it in the business side. The business side keeps saying, well, I'm not sure demand is there for my goods and services. I'm going to be cautious. So nobody's taking a risk on the business side, right? So that lack of investment is also a problem. So I worry about the investment side, and I also worry about I think about when is the consumer going to finally pick up, and it is related to that income decline.
Thank you so much for commenting on that, because capital spending plus the hirings are the main concerns, even in the GDP's breakdown, if you look in terms of the businesses.
That's right.
Surveys.
That's right.
Thank you so much for coming, Kathy.
My
We'll
pleasure.
have you again.
My pleasure.
Evet, burada sohbetimiz sona erdi. İstihdam, işsizlik rakamlarını detayıyla, aynı zamanda büyüme tahminlerini de 4. çeyrek için Kathy Bostjancic'den aldık. The Conference Board'un ekonomisti. Söz tekrar sizde. İyi hafta sonları diliyorum.